Ticker symbol OPRA is up over 15% in the past year, and today we'll be looking at a company with a very unique value proposition, which is paying a great dividend. However, this company currently has troubled net margins as, despite their revenues growing over 21% in the past year, their net income has actually shrunk by over 45%. And this is weird because the company had a consistent net margin up until the latest quarter, when it suddenly dropped. So today we'll be looking at none other than OPRA, a technology provider. In their annual report, they state that they're a global internet brand with a large, engaged, and growing base reaching over 313 million average monthly active users. Now, as you can see on the image, this company is mainly recognized for their browsers, which is the first segment that we're going to talk about. Here they have browsers which are optimized for PC and for mobile devices, which feature tools such as integrated crypto wallets, built-in VPNs, ad blockers, mods, and other social media interactions. So this takes, for example, Chrome and builds it into a super browser which has a lot of connections that would otherwise be more expensive if you went one by one selecting these additional features and plugging them into your existing browser. So what OPRA does is that it brings you the whole browser with everything integrated, so it's much simpler and much smoother to actually use. Then they also have gaming services, and this is a very nice touch because they offer GX Games, which is a low-code game developing tool where even people with very low coding experience can start to create video games. And once these creators have built their games, they can publish it into the GX Games platform, which is a platform owned by OPRA, which has over 7,000 games which have been created by low-code developers using their platform. Next, they also have content platforms, and these are AI-powered content aggregators which offer personalized recommendations. And this can be, for example, for the news, it can be if you're into investing for the stocks that you're following, but specifically tailored depending on what you've read in the past and what you're more interested in. But this doesn't stop here, because they also offer solutions for e-commerce, where they have crypto wallets which are embedded inside the browsers, as we explained previously, and they even provide very simple but very efficient shopping rewards with partnerships with some of the biggest retailers such as Amazon. And last but not least, they also have an advertising touch, which is a managed advertising platform that leverages all the data that your website collects and delivers targeted campaigns. It helps companies and individuals which are entrepreneurs to actually tailor and conduct their marketing campaigns. And the great thing is that all of this is free to the user. Well, there are some extensions that are paid for, but the main way in which OPRA actually generates revenue is through ad placements around their games, their websites, or their browser. These ads are integrated with the inventories of partners which are mainly Google and Meta, so the best of the best, and they also generate income from partnership with search engines, where they're also using, for example, the Google search engine, and Google pays them a fee for every search that is actually conducted. So see what I was telling you that this is a very unique value proposition? Well, it looks like it's working out. They currently have an 11% return on capital employed, which we do have to say is a bit lower than our 15% threshold that we usually have for this value. But they have a 100 times interest coverage ratio, which means that they won't have to worry about debt anytime soon. They have an almost 80% cash conversion rate, which is pretty solid, 72% gross margin, and a 17% net margin, which is above our threshold of 15%. And it looks like this company knows what they're doing, because their revenue growth has been accelerating in the past couple of quarters. The things that are a bit worrying is that their gross margin is consistently decreasing quarter after quarter. However, the most worrying factor is related to their net margin, where we can see that for 4 consecutive quarters, this net margin was very consistent, but in the latest one in December 2024, this actually dropped almost by half, which caused their net income to decrease substantially despite their revenue growing at a pretty good pace. However, we do have to remember that this margin is still above the margin that they had in September 2023, and that those 4 quarters could just be generated because of special items. Now, as we always say, the efficiency ratios mainly follow net income, which is why we can see here that they were rising consistently until the past 5 quarters, where they remained pretty consistent up until December 2024, where they had a sharp drop. However, their return on invested capital is still sitting at above 25%, which is pretty solid. And I love seeing this balance sheet. Their total assets have been very stable, which allows their return on capital employed to improve slowly but surely, and their liabilities have not been increasing at all. They do take a little bit of leverage here and there, but on taking on such a low amount of debt, it allows them to attract those more conservative investors. And now when we look at their fundamental analysis, I give this company a 5.5 out of 8. But as you can see, there are 3 maybes. Starting off with the low liability risk, OPRA had an interest coverage ratio of over 100 times, so this means that they won't have to worry about that anytime soon. But now this company also has a solid balance sheet because they're able to pay all of their short-term liabilities only by using their current assets. I'm happy to say that their cash flows are very consistent and that their revenue is growing at an organic pace, which means that they don't need to require on acquisitions in order to improve their top line. They do pay a very solid dividend since the start of last year, I believe, and they conduct share buyback programs, which is great for rewarding shareholders. Now, we usually describe pricing power as the ability of increasing your prices at a rate above inflation without losing too many clients. However, in OPRA's case, the main revenue source that they have is through advertisements. And as we know from all the major companies in the world, whether it's Google or Meta, this works as an auction where you create a slot where an ad could appear and all the different companies which want to actually place an ad compete in pricing for that slot. However, this means that OPRA does not set the price of their advertisements, generally. This means that it's very tough for them to increase this value or these prices. This is the part of OPRA that I believe does not have pricing power. And on the other hand, they do have a negotiation or a partnership with search engines such as Google, which pays them for every search that is done via their browsers, for example. And in contracts like this, since OPRA is the one that is bringing all those 300 plus million monthly active users, they're the ones who are able to actually negotiate the conditions and increase the prices year after year. And now in terms of existing moat, I believe that if you're someone which is looking for an incredible browser which provides a unique solution and creates an environment which basically offers everything to you, there is no other better alternative to OPRA. However, we do have to remember that this segment has very low barriers to entry because you just have to create a browser and plug in a lot of different extensions to it. However, the main source of competitive advantage that this company currently has, the millions and millions of dollars that they've spent on advertisement, which has inherently made their brand appear as very premium and as the leader of this segment. And this actually is a very strong competitive advantage. However, there are 2 additional things that I did not quite like, starting with the fact that they don't pay a dividend, but I can understand this. Currently, they're not a mature business, they're growing at a pretty fast pace when it comes to their revenues, and their focus right now is just getting their margins under control. So I prefer for them to focus on that before they start paying a dividend. And now when it comes to their organic free cash flow growth, it's just not there. Although their free cash flow is consistent, for the past 2 years, it has pretty much been stable. However, I believe that if they manage to get their margins under control, they will be able to grow this free cash flow again. Here is the dividend that we were talking about. They currently yield almost a 5% dividend yield. However, they have a payout ratio of close to 90%. This means that this dividend is pretty much not sustainable because it means that the entirety of their free cash flow will go towards paying this dividend. When we look at their valuation analysis, their current price to earnings ratio looks like it's trading above the average of the past 2 to 3 years. And when we look at the free cash flow yield, we can see that it currently has a 2.67%, which is lower than the 3% long-term inflation. This generally deems the company as that it may be trading at an overvalued valuation. And when we look at risks and possible challenges, well, of course, the main one that I see is the worsening competitive landscape because there are not many barriers to entry in this segment. And as we stated, it's a very lucrative business. So there are a lot of companies starting to get into this segment. But on the other hand, I believe that the major risk is the risk for an economic downturn or just their cyclicality. Because the advertising business is very cyclical of nature. When there is an economic downturn, businesses decide to spend a lot less on advertising because they know that people will spend a lot less on their products. So this will directly have an impact on OPRA's financials in case that there is an economic downturn. But now before we move on, please remember that I'm not a financial advisor and this is not financial advice, so please do your own due diligence. However, I believe that this company has a strong competitive advantage despite them not being many barriers to entry and that they have predictable, consistent cash flows. However, I would need them to improve their return on capital employed to meet our threshold. Now, I believe that this is a good company and that it could be a good investment. However, their questionable moat and low return on capital employed is keeping me on the sidelines for now. And as always, this has been the Cashflow Compounder. Thank you for watching. Please join the free Patreon for extra content, and I'll see you in the next one.